Hi, my name is Paul Skeith, and I'm a business lawyer practicing in Austin, Texas. Today's video is about the required acknowledgments that a 501c3 charitable organization must provide to donors to ensure that the donor's donations are tax deductible. When a donor makes a contribution to a 501c3, they often do so with the understanding that their donation is tax deductible. However, for a donation to be tax deductible, the IRS requires the donor to receive a written acknowledgement from the charitable organization. So, what should the written acknowledgement include? The acknowledgement provided by the 501c3 organization must include the following information. 1. The full legal name of the charitable organization should be included in the acknowledgement. 2. The amount of any cash donation. If the donor made a cash donation, the exact amount should be stated in the acknowledgement. 3. A description of any non-cash donation. If the donor made a non-cash donation, like the donation of stock, for example, a description of the donation should be provided. 4. Statement of no goods or services provided. If the charity did not provide goods or services in exchange for the donation, a statement to that effect must be included in the acknowledgement. If goods or services were provided, a description and a good faith estimate of the value of those goods or services must be included. This no goods or services language is easy to forget, but there are tax court cases holding that the acknowledgments that leave out these magic words result in donations that are not tax deductible and unhappy donors. So when should the acknowledgement be provided? The acknowledgement needs to be provided to the donor by the earlier of 1. The date the donor files their tax return for the year of the donation, or 2. The due date, including extensions for filing that return. What are some best practices for making sure that charitable donors get the acknowledgments that they need? For nonprofits, I suggest that they give donors a form acknowledgement meeting all of the requirements early and often. Create a form letter that you can send to a donor when you receive the donation that includes all the necessary information. Also include all of the acknowledgement information as a message in your accounting system. This way, when you generate an end-of-year giving statement, the proper acknowledgement will be part of that form as well. If you're a donor, pay attention to the giving statement you receive and make sure that it checks off all the required boxes. If you're making a large donation and have put a grant agreement in place, include the acknowledgement language in that grant agreement itself as well. Meeting these acknowledgement requirements is crucial for maintaining the trust of donors for nonprofits and also for ensuring that donors can claim their donations as tax deductions. This helps nonprofits bring in repeating donations that fund their good work for years to come.